You're about to click away. Not because this isn't useful, because it feels uncomfortable. The word journal already sounds slow, boring, optional. And that tiny resistance you just felt, that's the same resistance that's been keeping your results exactly where they are. You don't hate journaling, you hate what it would prove. You've been trading long enough to know the basics. You understand risk, structure, entries. So why are you still hesitating on clean setups? Why are you still closing winners too early? Why are you still breaking rules you promised yourself you'd follow? It's not your strategy. If it were, you would have fixed it by now. The real problem is simpler. You don't actually know how you behave under pressure. You think you do, but you don't have proof. And without proof, you repeat the same patterns. Pause. You believe you remember your trades clearly. You don't. Memory protects identity. It softens the moment you moved your stop and calls it patience. It reframes revenge trading as confidence. It edits out the hesitation before entry. It turns rule breaking into flexibility. Without documentation, your brain keeps your self-image intact. I'm disciplined. I just got unlucky. I almost followed the plan. Almost doesn't compound. Here's what's really happening. You are tracking outcomes, not behavior. Every trade has two results: the money and the decision behind it. You track the first one obsessively, you ignore the second completely, and then you wonder why nothing changes. Think about your last 10 trades, not the charts, you. Did you risk the same percentage each time? Did you follow your stop exactly as planned? Did you enter only when all criteria aligned? Or did you adjust slightly based on feeling? Be honest, because this is where most traders look away. It's easier to search for a better strategy than to examine your own execution. But strategy isn't what's leaking your account. Ambiguity is. A journal removes ambiguity. It separates what you believe you're doing from what you're actually doing. And that gap is expensive. When you start writing things down, something subtle shifts. Not essays, not spreadsheets, 4 lines. What did I trade? Why did I enter? What was my emotional state? Did I follow my rules exactly? 4 lines, no storytelling, no justification. At first, it feels mechanical. Then you notice something. You hesitate before breaking a rule because you know you'll have to document it later. That hesitation is awareness. Awareness creates space. Space interrupts impulse. Impulse is what has been costing you money. By the second week, patterns surface. You increase size after a big win. You trade lower quality setups when bored. You move stops when price gets close. You overtrade after 2 losses. Without a journal, these feel isolated. With a journal, they repeat, and repetition removes denial. Once you see the same mistake 5 times in writing, it stops being bad luck. It becomes behavior. Now you adjust one variable, not everything, one. Maybe you stop trading after 2 losses. Maybe you lock your stop and forbid adjustments. Maybe you cap your daily risk strictly. One evidence-based adjustment. That's evolution. Most traders misunderstand edge. They think edge is hidden in a better entry model, but strategy without behavioral consistency is noise. The real edge is stability under pressure, and stability requires visibility. A journal gives you visibility. It shows you whether losses are strategic or emotional, whether winners are repeatable or random, which time of day you perform best, which conditions distort your discipline. You can't optimize what you don't observe. Right now, you are observing charts. You are not observing yourself. That's why you feel stuck, not because you lack knowledge, because you lack feedback. Most traders operate inside assumptions. I'm disciplined. I'm close. I just need refinement. Belief feels strong until a drawdown hits. Then confidence collapses. When you journal consistently, confidence changes shape. It becomes quieter, less emotional. You know your average loss. You know your rule adherence rate. You know your most common mistake. You know exactly what behavior costs you money. That clarity removes drama. Trading becomes less about hope and more about process, and process can be improved calmly. This isn't about writing pages every night. It's about eliminating self-deception. If you've been stuck for months or years, ask yourself one direct question. Do I have written proof of how I behave under pressure? If the answer is no, you are guessing. And guessing feels active, but it doesn't produce measurable growth. Documentation does. The traders who improve steadily aren't more talented, they just refuse to trade blindly against their own psychology. They observe, they adjust, they repeat, quietly. For the next 30 trades, record whether your setup criteria were fully met, your exact risk percentage, your emotional state at entry, whether you followed your exit rules precisely. Nothing more. After 30 trades, review them once. You won't need motivation, the patterns will be obvious. And once your behavior becomes visible, confusion disappears. Progress stops feeling random, it becomes deliberate, measured, controlled. That's where real improvement begins.